Hello everybody, this video is going to be a bit of a mixed bag. I'm going to touch on China, obviously Australian property, as we almost always do in every video, and then I'm going to show you some of the channels I subscribe to and I value highly, and suggest that you subscribe or at least have a look at some of the videos they have, and if you like it, by all means subscribe. I get no kickbacks. I haven't even contacted these channels. They're a lot more serious. I think a lot of these people make a living out of those channels. Me, it's a bit of a hobby. I've got a day job, so thank God for that.
China's growth numbers the worst since 2009, but regulators trying to calm investors' nerves, suggesting they will put a floor under equities, which have so far seen prices crash around 30% this year. Did they convince?
Well, not particularly. We saw a little bit of a sugar hit in early Chinese trade to that particular news. I mean, the biggest event for the day were those Chinese figures headlined by growth. And I mean, on balance, they were disappointing, but not enough so to really worry the markets. Now, we did have those regulators coming out and effectively saying that they would put a floor under the ailing equity market or markets in China. And that did see the Chinese equity space get a little bit of a run on. Unfortunately, it hasn't exactly stuck, but in saying that, it looks like we'll look for a close that is effectively flat for the day, but there's still rough seas ahead, I suppose you could say, for Chinese equities.
Alright, so a couple of points here is that for those who've been living under the rock, the Chinese stock markets pulled back 30%, which you can call it pretty much a crash. And then what the analyst mentioned is that the regulators are going to put the floor under the market. I mean, that if that's not manipulation, then what is? So they're going to put a floor, they're going to inject liquidity into the market, i.e. probably start buying stocks. So central banks buying stocks is always dangerous, but form your own opinion on that. China can do whatever they like, and which is actually a good segue into one of the videos of one of the channels that I follow, and that being Real Vision channel. It only has, to be honest, 25,000 subscribers. I think they deserve a lot more, and the particular thing and the clip that I want to show you is the interview, or part of the interview, with Kyle Bass, who's a legendary investor who has, by the way, been wrong on China for a long time, but maybe this time he's going to be right. So this is one of the videos. So Real Vision is the channel.
What we try to understand is the capital flows. When you think about capital flows, what did we learn 10 years ago, almost to the week, was that flows mattered more than stock. And as soon as the flows became meaningful, the stock became important.
Right.
And so this idea of what happened to Lehman, what happened to Bear Stearns, what almost happened to Goldman and Morgan Stanley, actually applies in the context of the sovereign realm. There are many more variables to the equation, but when you think about how China operates and how it operates globally, you have to bifurcate your thought into two buckets, right? One bucket is how China operates domestically. They have a renminbi-based economy that they essentially control, and I think global investors understand that they can control their internal accounts of RMB basically however they wish. They can print more, they can recap banks, they can make losses go away, they can make people go away, they can do all.
Right, they can make people go away. We'll, I think, stop there as far as the China for now. The other channels that I highly recommend is the most underrated channel, in my opinion. Again, I don't think these channels and these people know about me, and they shouldn't. Why would they? I just look at the news and pick up other people's type analysis without, as little as, at least as little of stealing. I'd like to call it, not stealing at all, but just gathering all the information that's out there and just presenting it to you in short videos. So this one's called Walk the World, and the gentleman's name is Martin North. Now the channel's called Walk the World, and it's digital finance analytics, and it's Martin North. So as far as some sort of marketing recommendation here and advice, unsolicited obviously, would be to kind of bring it all together, to maybe call the channel either his full name, or or digital finance analytics, or just stick with the Walk the World brand, which really doesn't tell you what it is. Probably the best is DFA, digital finance analytics. Anyway, he talks about property market black hole. He was on 60 Minutes recently, did a pretty good piece especially for a mainstream brainwashing type media. They presented his input fairly, which they don't always do. So the property market black hole, he's got a lot of information, a lot of details. He does surveys, so his evidence is not anecdotal as mine is. He will just go into the details of that. He will go into the bail-in laws. There is a very good video here where he talks about with one of his guests, Adams North, and never-ending bail-in scandal. I really recommend that because it looks like the current law says that you really pretty much can't bail in until you see the wording of that law and then connect it with the wording of the contract that you've signed with your bank when you've deposited money there, which pretty much boils down to, yes, they can take your money in the time of distress the bank may find themselves, which is really scary, and they're working on it. They're bringing that to attention to some of the politicians, and hopefully that'll be voted out, or maybe there'll be an amendment to that law where it specifically mentions deposits as not being able to be converted into different instruments and essentially taken away from you. So that's another one. Live wire markets, 4,800 subscribers, but they got these quick videos on interviews with buy, hold and sell, and they talk about certain stocks, might give you an ideas of trading. They're Australian, so it's more relevant for us. CEC, Citizen Electoral Council, they also talk about the bail-in laws. They talk about the Glass-Steagall Act, where they want the banks to be split into an investment bank and then the deposits bank, like a boring part of the banking, where deposits. So what happens now is that the banks are lumped into one entity, which means when they do investments and those investments go bad, they can tap into your money, your deposits, because of their bad derivative and all sorts of different financial engineering bad investments. They can put their hand in the cookie jar and take it from you because of those bad investment decisions. Glass-Steagall was always there to protect people's savings and say, hey, you banks need to split up. One arm is going to look after deposits, which are secured, and the other arm is your investments, and you're pretty much gambling. And if you go bad, that arm might go under, but the deposits are untouched. Currently, they can take your deposits. So CEC Australia. There's an independent man. He makes a lot of good points. It's about libertarianism. It's about the craziness of political correctness, big government, the nanny state. The feminists going mad, and why the left is going to pretty much destroy the Western societies as we know it. He's so correct that I cannot watch some of his videos because they make me angry. He brings those points really eloquently, and I have to skip some of these videos because he's brutally honest, and I agree with 99% of it. So independent man, he's Australian. And then there's a little channel in America, 21,000 subscribers, Wall Street for Main Street. He's got live sessions and podcasts, and I just like to kind of listen to his insights. He's been in financial industry for about 10 years. I think he's a young lad, younger than me. He makes some good points. I like listening to it as podcast type things. There's not much editing or any super quality videos available, same as mine. And then we got Real Vision, that interview I showed you with Kyle Bass, or part of it was from them, being American and being backed by some of the really heavy hitters 25,000 subscribers is really low. Another underrated channel I recommend. And as a bonus, I've got this nutritionfacts.org with Michael Greger. He's written a book, How Not to Die, nothing to do with finance. I'm really interested in longevity, and there's always 1 or 2 videos every day where he goes through all the English language research papers, and it boils it down to 4 or 5 minute videos where you can make a decision on what's good for what. You can look anything up. It's nutritionfacts.org. Michael Greger, How Not to Die is the book, so I'm a big fan recently. Again, nothing to do, it's just a bonus recommendation. Okay, we're now moving on to property market hints, Australian property market hints, where Shane Oliver, you would have seen him on TV everywhere. He works for AMP Capital. His prognosis was that Australian property was going to drop, I think it was Sydney, Melbourne property was going to drop 15% peak to trough. Now he's revised that upwards, and he said from 15% he believes that that's going to be a 20% fall. Again, I'm sticking to mine, 40% fall. There's plenty of evidence for that.
Well, NAB, the latest bank to be grilled by politicians, and with AMP, Shane Oliver now expecting house prices in Sydney and Melbourne to drop 20% from peak to trough. Do you think things might be about to get even worse for the banks?
Alright, without going too much more, I think things are going to get much worse for the banks. Their shares have dropped 10-15% already, and we haven't even seen the beginning, or we've seen the beginning of it, but we haven't even seen the main act here, where the house prices pull back, a lot of people default, and there's a knock-on effect, a snowball, a loss of jobs, a loss of confidence, spending, the confidence of purchases, and consumer confidence is what I was looking for, is nowhere to be seen. That's when the real fun starts.
I think in the medium to the long term, the trend's down for the banks still. We saw, for example, on the...
Yeah, trend is definitely down.
But if you really look at the fundamentals at this point in time, calling property prices, a potential slowdown in credit growth, net interest margins, of course, being squeezed, that in the medium to long term, and if you obviously tack on to that as well, the potential for regulatory risk, is that it's still a fairly bearish picture emerging for the banks. And it's at this point in time, of course, you'll see investors jump in who do want that safe yield play. But for many markets at this point in time, they remain at the very least a hold, if not a sell, but certainly not a buying opportunity if you look at the trend.
And the fact that, and the proof that the banks are stuffed and that they're going to be used as scapegoats for the government, who, by the way, created them and regulated them.
Charging premiums for life insurance to someone who's dead. That's the position, isn't it? Yes.
Yeah, so my opinion is that the government stuff-ups will be blamed on banks. Banks will have to take the fall for the government, and everyone's going to blame them. Yes, they've done all these things under the guise of the government regulation, which was non-existent. So now all of a sudden, somehow even the governments are so angry at the banks. They didn't know. Nobody knew what was going on, including CEOs and the politicians and everyone else. Of course they knew. Back to the Australian property market hints.
The Deputy Governor of the Reserve Bank says there's too much focus on negative risks to the Australian economy, especially when it comes to the housing market. His comments come as Domain's chief economist predicts auction clearance rates in Sydney are headed for an all-time low below 40%. But Guy Debelle says commentators have been warning about a housing crash for decades and haven't been proved right yet.
There's probably a housing market crash been foretold for at least the last 3 decades, and maybe one day it's here. But there will be any number of I told you so's around that one, I'm sure.
Mr Debelle also said the fall in unemployment to 5% demonstrates that the RBA's interest rate setting is helping to support the economy.
You know, the fact that there'll be a lot of I told you so's doesn't mean that it won't happen. The crash won't happen. It'll just happen, and it'll be people, maybe like myself, saying, hey, I told you so. I suppose that's just our nature. And just finally, another content producer I follow is the ABC iViews, their business. You can find it on there, as you can probably tell from my videos. they're unbiased enough for my liking, so I can stomach them as far as the mainstream. Thanks all. See you later.